Let's take a look at what happened with Tesla today. So we closed at 267.28, down $15.48. That's 5.47%. Post-market seemed to be down by 0.22% in addition. Let's take a look at the facts and then try to profit from those facts. Yesterday was a technical buy signal on Tesla based on our criteria. Yes, we were still into a downward channel, but we started breaking outside of a lower downward channel. We started breaking a horizontal resistance, and then we had a nice move up not too long ago, which we profited from. Then it came back down a little bit and started to form a bullish channel. It started to form a bullish channel, and this is the bullish channel it formed right here, bullish channel. And within that bullish channel, we came across again 273.79. This is what made us call the buy signal right here, because we broke outside of that horizontal resistance. After being outside of the downward resistance, we even started, as I mentioned, within a bullish channel. Stochastic was over 60. So, we had all of our criteria. Nothing's perfect in the world, but if we look at it, we are down 5%. Okay. Yesterday, we were up pretty much the same amount that we were down today. And all in all, this is not too bad. We are above 260.39 again. 273.79 is still very close. We still have stochastic over 60. These are all facts. We still have stochastic over 60. Let's take a look at the 1 hour chart. So on the 1 hour chart yesterday, Tesla was making higher lows, but it was stopped right here. It was stopped at 284.84, but this was looking quite good actually. So this morning, what happened? We had a big move down. We had a gap down. And if we take a look at the rest of the day, we started on the 3rd hour to go higher a little bit, but then we came back down pretty much exactly to where we were during the day. If we want to go precise, we have support at 263.79. I won't draw that one. But all in all, I don't think this is too bad. Yes, this is a move down. This is a move down. Depending on where you put your stop loss, you might have been stopped out, but at the same time, you might still be okay. Myself, I had calls that I got out of. I bought calls yesterday towards the end of the day. I got out this morning. I followed it on the 1 hour chart. So when I saw the VIX coming super high at the beginning of the day, I thought that something was going to happen, of course. So I looked at it in the morning and we opened quite low. We opened at 265. And then we started to go higher and higher and higher. Second hour, we were at 276. So again, above our 273.79. And then we started to weaken. And when I saw that this was pretty much going sideways, this is when I decided to get out of the calls. And then we came down close to 260.39, came back up, and now we are slowly getting back down to either 263.86 or this low right here at 261.38, just above 260.39. So it is what it is. We need to roll with the punches. We cannot bat 1,000, but we need to get smarter each time though. So 273.79 is nice, but this will no longer be the buy signal trigger anymore. The buy signal, we are moving it to 291.77 because this is where the congestion zone is starting to get more clear. This is where we are between 252.14 and 291.77. This is going to be the trigger that I am personally going to use. You can argue with me and say, well, maybe you can use 284.24. You would not be wrong. This is the last stop that we had. But in the past, we broke it for fun twice. So because of that, I think that 291.77 is just the stronger and better buy signal. So this is the one I will be using. You can use any buy signal that you want. Everybody's free. If we go back on the daily charts, this is where the new buy signal is going to be at 291.77. But then if we break this, we are getting towards the end of the bullish channel before we start getting into the bearish channel. So, this one right here is going to be a very hard buy signal to use because the downward channel is going to be so close to it. So it won't be the best buy signal ever. And conversely, if Tesla is having more problems and start breaking lower than 252.14, because this would be breaking below the congestion zone, then we are starting to be talking about shorting. But right now, we cannot talk about shorting yet. It was a weird day. Everybody's afraid and everything. But all in all, Tesla getting down by 5% is not much, is really not much. Tesla can do that. 5% move down and up. It can do that every single day of the week. Let's take a look at the rest of the market. VIX. This one is still concerning. We are at 30. So we are up 8.5, up 39%. And by the way, when the VIX goes higher like this and you have calls, if your underlying stock goes down, you lose money. But at the same time, when the VIX goes higher, the volatility of the options goes higher. So options are gaining a little bit of value because of the implied volatility. And this offsets a little bit the amount of money that the options are worth based on the underlying stock price. So this is a strange effect that is happening right here. So yeah, look at this. We are at 30, right smack on our resistance that we drew in the past. Because the VIX is climbing slowly. It has been climbing slowly. The highs have been going a little bit higher through time. And right now, look at this. This is right smack on that line. Bonds have fallen pretty far down. This theoretically should be helping the stock market, but because of the Trump tariffs, everybody is all over the place. So, this is what it is. We have to deal with this. Let's take a look at the stock indices. Dow Jones, we were pulling back up, encountered the downward resistance. We came back down and look at this. This is quite perfection. Boom. And then we have a big move down today. So this is a little bit too late to short this. This would be chasing this. This is a very sudden move with a gap down. SPX, the same thing, big move down. It's possible to chase that. If you chase it, then set a stop loss not too far up, just in case it reverses on you. And the NASDAQ, this one makes a little bit more sense. See, it stopped right on the previous support at 18,447. Russell also moved down outside of this smaller downward channel. And right smack on support, we stopped right on it. So what can we do with all of these facts? Well, as I said, we can start shorting Tesla if we go below 252.14. Because remember, we have people that are buying the dips. We have YouTube channels that are saying, this is the time to buy. Everything is so low. This is the time to buy. So we have these buyers that are coming in. And I believe that these buyers starting to push Tesla higher right around March 21st. They pushed the stock higher, then was a cooling period, and then pushed it higher recently as yesterday. Let's remind ourselves, we are buying a stock when a stock makes a significant move up. The next significant move up is going to be higher than 291.77, and it can still, it can happen at any point in time. As I explained, Tesla was not a fundamental buy in April of 2020, but it was the right thing to do. So let's just remind ourselves that on this channel, we base our decision based on what we see on the chart, not on all the talks that we hear, because we hear a lot of talk, but talks are not facts. And what better facts than charting a stock price? The stock price discounts everything. All of the news, all of the behaviors of the buyers and sellers are distilled in the stock price. And this is what we are watching. Let's take a look at the market. Okay, look at Apple down 9%, Tesla 5%. Tesla does it year round. So consumer non-durables, they are higher. Health services, communications, utilities, pretty much even, Steven. We have some up, we have some down. But finance, retail, trade, health technology, technology services, electronic technology, they took a beating today. So what might have contributed a little bit more than tariffs, because tariffs, we kind of knew yesterday during the day that Trump was going to apply them. But what came out today also are the ISM services PMI. And if we take a look at them, the ISM services PMI fell sharply to 50.8 in March 2025 from 53.5 in February, well below forecasts of 53. The reading pointed to the softest expansion in the services sector since June last year. New orders and inventories slowed and employment contracted sharply, 46.2 versus 53.9. Also, supply delivery eased and backlogs of orders indicated contraction for the seventh time in the last 8 months. So yeah, the services sector is shrinking. This is not cool. And on Friday, we are going to get the non-farm payrolls, unemployment rate, and Federal Reserve Chairman Powell is going to speak. So on Friday, we are going to have most likely a lot of volatility. So we need to tread lightly. Going long on something, of course, takes a little bit of kahunas. You need to set your stop loss not too low from the trigger, and then you should be okay. And in terms of chasing the moves down, the same thing. When we chase something that has gapped down, this is always risky because it can just as easily gap up. So there, what we are looking for is an accumulation somewhere and then a break that's not too far down. That's hopefully not a gap down so that we can ride it down. Here, the write down was pretty much done. Most of the write down just happened first thing in the morning. So this is just harder to trade. And don't worry, we are going to have better opportunities eventually. It always happens eventually. Thanks very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.